Hey everybody, how's it going? Today is Friday, February the 18th. Welcome to another edition of Midas Letter Daily. I'm here on my own again as usual because my co-host Edward is gallivanting somewhere and I don't know where that is. So we're just going to take it from here. I have a long conversation. I think it went about 17 minutes long today with Jim Albertelli, CEO of Voxtur Analytics. And I think that you are going to be enlightened extensively. They just announced an upgrade to their 2021 guidance, exit guidance for 2021 at 95 million, up 58% from where it was before the upgrade. He has a lot of excellent updates on how the Voxtur digital platform is scaling, how revenue is scaling, and they're going to release guidance for 2022. And it is very impressive, triple digit, and it's triple digit growth. But yeah, I think that 2022 is the inflection point year, not that 2021 wasn't already for Voxtur. But anyways, we'll talk to Jim at length. For now, let's take a look at our major indexes here. We can see the candles are the S&P is down 9.61% year-to-date. NASDAQ down 15.4% year-to-date. And the Dow has lost 7% year-to-date. The sell-off continues despite the positive vibrations being broadcast by the captive audience of Fortune 100 banks and insurance companies that are the talking heads, suggesting to us that stocks are a buy here and that everything's going to be good. The reality is I don't see how anybody can expect that there's going to be any joy in the major stocks in the U.S. with the Fed poised to start raising rates in an effort to offset inflation. Inflation more of a concern to Main Street than Wall Street, but already I just want to start here with a look at mortgage. So this is the 30-year mortgage rate as of February 1st, and this thing just keeps on going higher. So 30-year mortgages are now at 4%. And if you bought a house at the end of December when mortgages were 2% and you paid more than asking, and the mortgage rates are going to rise as the interest rates rise and prices fall as a result because real estate turnover slows down, then you might be in a bit of a pickle for 2022, and that will spill over into the market. So we have lots to watch here. Let's take a look at some of the commodities, the comparatives here. So copper's still following this general trend that got started at the beginning of 2022. Let's pull this arrow down and let's pull it out a bit. But that trend remains intact for copper. Not so for the copper juniors, U.S. copper being my favorite one to track, down at 6.5 cents. That's because nobody knows about it, really. And the argument for the copper juniors is strong. Other copper companies have really increased in value since 2020, but not U.S. copper. Lumber starting to look strong again. Gold's off just ever so slightly in here, but this trend remains intact. In fact, the trend is now a little more sharply to the north. Put that up there now. But yes, holding strong just below $2,000, $1,994. I think it is the safe haven trade that is driving gold right now. The safe haven trade from geopolitical tensions, as evidenced by what's going on with Russia and the Ukraine. Safe haven trade from monetary instability, as demonstrated by the uncertainty that characterizes where things are going in the U.S. Most interestingly, Bitcoin is now in a decidedly negative territory, and this trend is now intact from November of 2021, which was the last time we saw Bitcoin peak. So this is a bit concerning. This looked like this was a bit of a dead cat bounce in here, and Bitcoin resuming its downward trajectory. So obviously not viewed as a safe trend by any except the crypto kids. What can you say? despite the fact that I hear Warren Buffett got involved. You know, he should know better, but Warren's getting on. Might be losing his marbles a little bit. Ethereum down at 2790 here, emulating Bitcoin's trajectory. Oil, slight sell-off. Oil started to sell off. This is a bad sign if oil's starting to retrace from that high there, suggesting that the economic picture for the United States in 2022 is generally negative. That's a reflection of that. What else? What else have I got for you? Well, let's talk to Jim Albertelli now. And actually, before we go there, let's take a look at our real estate charts here. Real estate, yeah. So we already looked at the 30-year mortgage. That's a pretty steep increase. Thoughts and prayers with you, as our favorite treat from yesterday was. Housing starts in Canada, decidedly on this trajectory. Let's put an arrow on there so that we're keeping track of when we started talking about since the beginning of 2022. Looks like housing could be receding. This looks like the year of the correction for housing. It'll be interesting to see, though. Housing starts in the United States also reversing here. Why? Anticipated low demand. So, yeah, the housing sector generally in a negative position according to the PHLX Housing Sector Index. So there you go. Jim Albertelli now is going to talk to us about what he thinks he sees happening in the real estate space, as well as the outlook for Voxtur and why they increased their guidance to 95 million, up 58%, and what it looks like for next year. Jim Albertelli is back. He's CEO of Voxtur Analytics, trades on the TSX Venture under the symbol VXTR, and in the United States under the symbol VXTRF. Jim, welcome back.
Hey, good to be back. Thank you for having me.
You bet. I want to start off with a look at your most recent updated slide, which we're looking at on the screen here. You have upgraded your 2021 revenues by 58% to show an exit of 95 million bucks. What happened to see such a big upgrade?
Well, I think that the organic growth that we predicted we'd have organic growth right at the beginning of the year, but we didn't know as we took an acquisition in. The thesis was always that our organic growth would be land and expand. And people and investors would always ask me, okay, Jim, it's inorganic because it's an acquisition, or is it organic? And I'd say, look, it's a little bit of both. It's inorganic when we make that initial acquisition, like ANOW. Okay, that was inorganic. We bought them, but we bought $1 million basically a year in revenue. We quickly in 4 weeks took that to $700,000 a month. Okay, so the 700,000, the less than 100,000 to 700,000, that's organic. The little component piece that we bought was inorganic through acquisition. So I think what you're seeing is when we said that we would land and expand, what we were really saying with particularity was that we had master service agreements, contracts with tier 1 banks and tier 2 banks and mortgage servicers, so that if you came into our service wheel, we're already selling one service, we could add that extra service on. And we had all the compliance and risk already baked in, so we could actually serve those financial institutions. So some of these companies that we buy, that we find, it would take them years to get to a Voxtur-like distribution. When they come onto in our family of companies, and now they have all of our corporate rigor, we could deliver them quickly. So it was organic expansion that you saw. That was the difference maker.
Right. Interesting. Okay, so that's 2021 in the bag. What about 2022? What are you guiding for that?
Well, 2022, you're going to see, you'll see the forward-looking guidance being published soon. I would expect triple-digit growth again. People are going to say, well, where does that growth come from? Really, it comes from that continued organic expansion. We have a couple of new products and services that we're delivering, but then we just have with the uptick in rates. And I told this to people before. I said, look, don't forget, Voxtur has a default business. It's been completely dormant. Yes, these servicers have to reevaluate their portfolios. Okay, so it'll be slow grow in Q1, but by the mid to end of Q2 and Q3, you're going to see that revenue can increase exponentially, right? So that growth from default services is going to continue to increase as more defaults move in the system. You've already seen that the rates have increased quite substantially. We know that the Fed's going to come out and increase the rates again. We know that that's going to increase the default market. But the other thing it's going to do is where Voxtur is unique, like creating efficiencies in valuation space. Lenders now have time on their hands, where before they were drinking out of a fire hose, and even if you brought them an efficiency, they didn't have time to look at it. They were doing too many loans. But with the increasing rates, now they're taking the time to step back and go, wait a second, what can we do differently? Well, Voxtur has the ability to originate loans through lead capture, maintain your portfolio through all of our data and analytics. We can do portfolio monitoring. We have the ability to make your appraisals more efficient and digital. And all of those services are great. So an uptick in rates for us gives us it just opens up that addressable market, and it lets us attack it, because now people are focused and really looking at how can I improve. When there's too much business, there's no incentive to improve, right? I mean, people are just too distracted, too busy, trying to build scale, et cetera. But now with the raising rate environment, you're going to see Voxtur continues to expand, take market share. Voxtur's profits and revenues continue to increase. And all of this market could be the best of both worlds. It might be the best of times and the better of times, rather than the best of times and the worst of times, right? If you're a literary buff, but it certainly will look that way with the default technologies taking off, as well as our suite of origination, servicing, and investment services. Those are going to be some of the macroeconomic influences that give us support to the business that goes through 2022.
Right. So Freddie Mac and Fannie Mae have approved the use of desktop appraisals, which is obviously fantastic for your ANOW division.
It is.
Does this suggest that the entire range of digital sort of food chain applications are going to be approved by Fannie Mae and Freddie Mac? Like the whole process is going your way.
Yes, the whole process is coming our direction. I think if you look at FHFA, the Federal Housing Finance Authority, if you look at their 14-page guidance of what they were trying to accomplish with Fannie Mae and Freddie Mac, and remember, since Fannie and Freddie went into conservatorship, FHFA is really running the bingo there. You'll see that they actually, I don't know if it's on page 10 or 12 or whatever, but you'll see where they actually outline the use of digital strategies to reduce the cost of home ownership and to increase the velocity of loans that they can make. So when you're looking at it, you think about, and that's why I said Voxtur is built on, we're data as a service. We're not built for tomorrow. We're built for 5,000 or 10,000 tomorrows. The concept was, and with this desktop appraiser, we were already ready. We already have the digitization of that workflow where we could change it on the fly. If Fannie changes a standard, we could change a standard. But we have the full continuum. We have it's an appraiser. It's the appraiser and its data sitting at their desk. We have it's an inspector and an appraiser. It's a broker and appraiser. It's an agent and or an appraiser. It's a consumer and data science. So remember, Voxtur has built one of the largest databases in North America. We have access to all the MLS data, all the CoreLogic data, et cetera. So we can, in our digital workflow, as it changes, we're ready for every change. Our Voxtur valuation technology, formerly known as ANOW, which route optimizes the person, the appraiser in the field, it could be the broker in the field, the agent in the field, the attorney in the field, right? So every one of the iterations towards a completely digital model, which is an augmented reality app for a consumer, which we already have, and the data science, which we already have. Those two components might be the total future state for 75% of loans. Voxtur's there already. Like all these changes and evolutions, we're done. We built it. We're ready. So this desktop appraisal was the next step to make the human capital more efficient. Let the appraiser sit where it's a 90% LTV, first money, purchase money mortgage, right? So it's you have 10% of skin in the game. It's a purchase loan. Let's let it be a desktop appraisal. So the appraiser can stay at home, get the data science, look at the comps, and provide their expertise. Well, that's the next step. But the step after that, may be, hey, let's go with an inspector or an inspection or a broker or someone else going to the property, taking a look at it. And now all of a sudden you can go 100% LTV, right? So that loan will be coming next, and maybe an appraiser looks at it. But you can see, because appraisers aren't, they're not creating as many appraisers anymore. It's not an area of science that or business that students are moving into. So they're not being replaced, but we're having more and more housing stock being built. So there'll be a disconnect. And we're going to have to look at other places. We're going to have to take that human capital, the appraiser, and put them on the most specialized properties, not in subdivisions, not in condominiums, not with a lot of good comps, these outliers. That's where the human expertise, like much in life, will be focused on the outlier. The general population could do a lot better with macro and micro economic analysis, with a forward look on what the home could be worth, with an inspection that could be a virtual or augmented reality inspection by a homeowner tied back to a public record. We already do all that at Voxtur. So that's why I love this change. And oh, by the way, while the desktop appraisal may not change the cost precipitously, ultimately it should, but the cost will go down at some point in our future. Today, it might be $800 to $1,000 appraisal. Some point in the near future, in 24 months, FHFA, Fannie and Freddie are going to come to a company like Voxtur and say, guys, we've seen what you can do in the alternative to title. We've seen what you can do in other places. You got the data. You've got the science. You can feed it to us. You can mitigate our risk. Why not? Let's take this valuation down to 1 day, because a consumer walks through their home and maps it all to from 3 weeks and $800 or $1,000 to 1 day and $100 with less risk. Why don't we go there and put that $700, $800, $900 into a consumer's pocket and make getting into a home more affordable? Because it is important to people, and I think that's where we're going. We're going to that place, and then the appraisers get to really focus on those few properties that are the more difficult ones. They're unique. They're high-end properties. There's no comps. It's a meat and bounds description. It's rural. Put the appraiser where we need the human capital most. Let's use data science, and an inspection for the rest of the world, and save everybody that money and put it in their pocket. And don't they need it now with inflationary pressure? And don't they need it now with fewer homes and too many offers? Like those combination of things, this could be a great way for people to win, to help consumers get into homes. And that's what Vox is about.
Yeah, so the Federal Housing Finance Agency also just recently released a advisory bulletin on artificial intelligence, machine learning, risk management. And so they're obviously also moving in your direction in a big way. And yes. Do you find that their inference, or their participation in the structuring of new rules around artificial intelligence and machine learning that sort of drive your automation systems, is that going to slow things down, or is that actually should be interpreted more as a signal that the advent of digitization has arrived and even the agencies are now behind it?
Well, I think that last statement is exactly correct. I think the fact that you have government agencies now aware of consuming large amounts of data and data science, understanding how it can mitigate the risk, looking at long-term trending, and really being now at the forefront of change, understanding that's what needs to happen first. I can give you a less risky valuation product, okay, and do it with all the data science in the world. That's much better than maybe what's being done today with the human animal. And it's a better model, and it's less expensive. But until the rules and regulations accept it, until they allow for it, nothing's going to happen. I think the nice part about this, and this may be lost, but with the current administration, with the Biden administration, they've really pushed to reduce the cost of home ownership. They've been active in that and eliminating racial bias or other bias in the process. So they've been very thoughtful about it. They've given that mandate to FHFA. FHFA has done a fantastic job responding to it, and Fannie and Freddie now are ready for it. So I think that a company like Voxtur will uncover a tremendous amount of value for homeowners, reduce their costs, and it's our digital model that we've been talking about. That's why I say that when we release guidance, it'll be triple-digit growth again next year, and then it'll be even bigger in the future, because we're going to continue to scale up. But these shifts, this shift of mindset, is really what's going to allow us to use all the tools that Voxtur's already built and assembled. That's why last year was so important. get access to all the MLS data, get access to all the core logic data, get the valuation platform that's digitized in future world, because everybody's going to need a value. And whether you're an originator, a service, or a capital market space, get ahead of the data science. Bring in a fantastic CTO, build the platform, normalize the data, build the API field, be ready to deploy in the future. That's what Voxtur's been working on.
You bet. So then let's talk about how the Fed rise in interest rates that is going to happen this year. It just seems there's no doubt about it now. I mean, so the Fed says, well, we're going to start to raise rates in March. We're going to start with 50 basis points because we really need to get ahead of this inflation. Then they back up a bit because just the talk of this aggressive raise at the outset causes markets to tank. So they don't want to kill the golden goose that's been driving the wealth effect. Nonetheless, the mortgage rate, the real mortgage rate, is now just under 4% for, and that's a significant, that's a 200% increase from what a lot of people are going to pay. So my question is the rising interest rate going to drive mortgage rates to the point where there's going to be an increase in defaults, in foreclosures, in and a lot of volatility in the housing market? But at the end of the day, that just means there's going to be more transactional flow on your platform.
Yes, I think there's going to be a combination of it. Remember, we've got tremendous wealth built up in equity in homes across America. So if it begins to be, at least for the next, call it 6 to 8 months, as it becomes, less affordable, let's say people then determine they want to sell, they're selling into a good market. The raise in rate should increase the total velocity of transactions initially. And then at some point, once that settles out, as long as we have good wages and labor, and we still have a tight labor market, we're not going to see the influx of defaults. We also don't have as much supply. So if someone gets it behind a little bit, they'll list their house, they'll sell it, and they have equity to be able to do it. So there's more flexibility. See, there's several different factors at play. It's going to take some time for it all to settle out. The increase in rates will impact some people, and so does maybe a market adjustment affects their 401k, their stocks and their investments, hit it differently. That's depressive on people's ability to buy. That slows some of the rate of absorption of homes into the market. But on the contra, you've got some people that are getting some additional pressure as rates increase, their houses come into the market. So I think right now, you're not going to see a major change in the next 6 to 12 months. It'll take some time for some of these macroeconomic factors to bake. But what you do see is the loan origination, the decrease from the global refinances are almost done. There'll be fewer candidates of refinances, obviously. The rates go up. Now, why do I refinance? I can't. I've already got a lower rate. 4% is still a fantastic rate. 6% historically is a fantastic rate. We got so spoiled, 8% was a fantastic rate. None of those are bad rates, okay? It's just that we're so spoiled with 2, 3, 4% that this move gets us all nervous. It shouldn't get us nervous. Sure. It's back to a more normal market. But for Voxtur, which is not wed to the past. We don't have billions and billions of market cap the way things used to be done.
Right.
So we're not scared to make a change. We now have tools and services that can make lending less expensive, can give people access to more leads, and leads are the gold that really fuel the mortgage market. And I think with our data and technology doing that, with our increased efficiencies, reducing the cost of home ownership, Voxtur just continues to increase. Yeah, our default business will grow. There'll be more defaults. No doubt about it. That's going to happen. And that's been completely zero and dormant, right? So that business will continue to expand. And that's the other reason you might like Voxtur as an investment. Look, they've got the put and the call. They've got investments that win in both markets. And in the near term, we're going to win with origination volume, with purchase money market going, and default. And I think that's going to make for a pretty interesting 2022.
You bet. So is the mortgage moratorium coming to an end in 2022, and how's that going to affect the business?
It already has. That default moratorium has already basically expired at the beginning of the year. It's just that many of the mortgage servicers have to because they didn't offer every borrower every possibility. Remember, and this isn't a negative on mortgage servicers. The federal government when the pandemic started, didn't know what it wanted to do. And it gave certain relief, and it changed the types of relief. Sometimes they change the types of relief 3 times. If you took the first relief and you were good, you're making your payments, and you're not showing up on the radar, why would you be offered another, different plan? You've already got a plan that's working. Well, the government decided that, at least they decided that you should give everybody every plan. So some of the 29 servicers listed had to go back and evaluate everybody for every plan. That's what they're in the process of doing. That will all work itself out over the next 90, 120 days. And then, we already see the increase in defaults, but then you'll see more and more referrals and more work for our bankruptcy technology to do, connecting borrowers and trustees and the bankruptcy courts and the mortgage servicing platform. You'll see more of that work flowing through, and Voxtur will be able to work in all of its products and services in default, its title, its valuation, its tax, as well as on the purchase money side as that increases as well.
You bet. All right, Jim, great update. We'll leave it there for now. Come back to you in due course. Thanks for your time today.
Yeah, always great seeing you. Thank you so much.
You too. Bye for now. Okay, so Voxtur's longer-term price trend remains intact, and certainly from what Jim was saying in that interview, there's no reason to expect it to do anything but continue to improve, especially even as housing markets fall to pieces. That's only going to create more transactional density on the platforms that Jim is rolling out here. And as he said, in a few weeks, we're going to have more to talk about. Triple-digit growth in the 2022 outlook. So this is one of the stocks that is going to counter the trend, as most technology stocks are going to be reversing. So there you have it. We're going to keep following the Voxtur story with interest. That's all I got for you today. Come back to me next week. I'll be here and we'll talk more about markets. Thanks for watching.